Have you asked yourself, why in the world have gas prices fallen so much lately? The guy on the news is giving me a pat on the back for driving less. You know, in fact, I guess we've all stopped driving so much that the cost of oil has gone from $165 a barrel to $45 a barrel. Have you driven any less? Have you noticed any less traffic on the road? I haven't. You know why? Because the theory that oil prices have dropped because we drive less is bullshit. Supply and demand has very little to do with the falling gas prices. It's all about leverage, people. Wall Street's dirty little secret. You ever heard of a hedge fund? Well, let me tell you a little something about hedge funds. Hedge funds control literally billions, if not trillions of dollars. Hedge funds are unregulated. And you know what unregulated means? It means hedge funds report to no one. No one. A hedge fund works like this. When someone worth more than $1 million invests $1 million, the hedge fund then turns around and borrows $10 million. $10 million worth of stock. You may know this as margin loans. And they leverage the investor's money 10 to 1. Now it works really great when the price of stock goes up. Say the price of stock goes up by 10%. That means the investor's original investment of $1 million is now worth $2 million. Now most hedge funds are very well diversified, meaning they don't just own stocks, but bonds, real estate investment, trust, commodities, and you guessed it, oil. They love oil. In fact, when W started bumping chests with Saddam and that fuck from Iran, the hedge fund guys were licking their chops and drooling over the untold fortunes that they were going to make off the resulting skyrocketing price of oil when the first Iraqi drop of blood spilled. They don't want peace in the Middle East. They want chaos, mayhem. They want high oil prices. They don't give a flying fuck about you or your family. They don't care how much it costs to fill your gas tank or how much it costs to buy a gallon of milk. They and their banker buddies just made you millions of dollars by jacking the price of real estate. Remember that home equity line of credit you took out to pay for that Hummer that you couldn't afford? Remember last summer hearing about Exxon making more profit than the history of profit? The hedge funds started buying up oil too, because they sure as shit didn't want to be left out of the feeding frenzy when the Hajis started killing our sons and daughters, friends and co-workers. They wanted their profit from that bloodshed. This buying frenzy went on for quite some time, as the price of oil steadily creeped up to $100 a barrel, then 115, then 120, and then all the way to 160. I was spending fucking $700 a month on gas. Then the food prices were next. That's right, when oil prices go up, so does everything else. What, you didn't notice that you were paying $6 for a gallon of milk? Let me break it down for you. When a farmer in Ohio milks old Bessie, the heifer, not your wife, and puts the bottles on a truck to ship them down to the grocery store for me and you to buy, well, it used to cost him $2 a gallon to drive it down. Then it starts going up to $4.50 a gallon. But because he uses diesel, it's probably closer to $5.35. Well, guess what? He's not going to cover it, right? So what does he do? He raises the prices and passes the ass fucking right down to you, America. We all end up paying for it in the end. Pun intended. That's when the panic started. People old enough to remember the Jimmy Carter days with the gas lines, 15% unemployment rates, and interest rates in the 20s started clenching their sphincters and their wallets shut. They stopped spending their hard-earned money on frivolous things. And who can blame them? They needed every penny saved to pay for the rising costs of energy and food. They stopped shopping at the Home Depot, Walmart, Best Buy, Circuit City, and all the other American favorites. That, my fellow Americans, is when the real trouble started. 70% of the American economy is built on people like me and you spending money on stupid shit. Buying cars, remodeling homes, buying plasma TVs at Circuit City and clothes at Nordstrom's. When we stop buying, the wheel stops turning. And then the snowball effect occurs. Corporate earnings fall. When corporate earnings fall, layoffs happen. That spikes unemployment rates, which means fewer Americans are working and have even less money to spend, causing corporate earnings to increase the free fall. Then more layoffs, etc., etc., etc. The rumors started appearing about the housing, how bad the troubles really were, credit default swaps, the subprime mortgage-backed securities, fraud at the trusted Fannie Mae and Freddie Mac. Fear began to sweep through the marketplace. Large investors, fearing the worst and not finding the fundamentals, began quietly selling their positions back in October, before the news about the economy was even public. Remember good old W publicly stating, "The economy's fine and the fundamentals are strong." Well, guess what? They weren't fine, and everyone in that administration knew it. They needed the economy propped up, because once the average investor started getting wind of what was really going on, they were going to sell their stocks like whores at a VD clinic. Well, guess what? When the truth about the monopoly money created in the real estate boom came out, and good old Uncle W let Lehman Brothers fail, an American institution that's been with us since the 1850s, reality set in. Panic took hold. The average investor started selling quicker than you can say we're fucked, and massive amounts of wealth started leaving the market. The hedge funds, mind you, were late to the punch. Because remember what I explained to you earlier about leverage? Well, let me explain the other side of leverage. The side your mommy never warned you about. When the markets go up by 10%, you double your money, right? Well, what happens when they go down by 10%? That's right, kids. You lose it all. And so when a hedge fund investor panics and tries to redeem his shares, not only does the hedge fund have to sell its original $1 million investment, but also the other $9 million that it borrowed. Hedge fund investors began lining up at offices around the globe clamoring for redemptions, and the hedge funds were in a free fall sell mode, which exacerbated the whole selling panic. That's why you'd see the Dow Jones Industrial Average drop by 200 points in the last 90 seconds of trading. The hedge funds couldn't come up with the cash to settle the redemptions to pay the investors due to market losses and margin calls. So where do they go? What's the first rule in trading, friends? Buy low, sell high. Make money, bitch! Now, what was trading at an all-time high when the crash happened? Oil! Those fat, greasy fucks sold all their oil positions to make up for the record losses they were incurring on their leveraged stock positions in order to pay their investors redemptions to keep from going under. Hence, drum roll please. The price of a barrel of oil drops to below 50 bucks. And voila, you can fill up your tank for less than $25. Me personally, I was far too concerned with what Britney Spears was wearing that day to give a fuck. Plus, I wanted to see which contestant was going to get voted off of American Idol by that dude with the feathered hair. Wake up, people! Greed is fucking with our lives! We're too distracted by our television and all the other bullshit that's spoon-fed to us. Well, I, for one, am gonna wake up. And anyone else who wants to come out of their slumber to join me is welcome. Let the revolution begin!